So you are tuning in for the second installment of the, I don't know, trading morning, whatever we're calling it here, on what we refer to as Big TV, which is an extremely tiny web TV channel that has a want to grow big. And we're sitting here with Ed Matz. Well, you can introduce yourself for the people tuning in for the first time.
Well, my name is Ed Matz. I'm a trader, analyst, an economist. I would like to, a jack of all trades, really, but I'm passionate about markets. And it's what I spend my time doing, looking and trying to make a crust by trading. And obviously, to trade, I analyze first.
So we talked a little bit about FOMC, the announcement of the meeting from the Fed, the last ever Fed meeting under Ben Bernanke,
Yeah.
and you had some interesting calls before we started, and can you tell us a little bit what happened from your perspective in the hours leading up to FOMC?
Well, you very kindly complimented me on the calls made so far, and I had to put you right because I'm wearing certainly dollar yen. I was able to get out of some on the based on the fact it was looking 104.10. It got up to 103.50 and started coming off. Ironically, we mentioned yesterday with the S&P fractal was saying that it was 6 hours ahead of itself, which implied it would have the FOMC sell-off, the initial sell-off 6 hours earlier, which was obviously didn't make sense. But then whack, the market dropped. Fortunately for me, from my perspective, it dropped before FOMC. So looking for the dog end of the move on the FOMC, going back to the initial point, waiting for the FOMC to come out like it did last time, the market to drop and then buy into it. And that's basically what I did and what's happened so far. But the question is obviously more importantly, I'm holding some. I bailed out some of it pretty much here just to improve my risk return because I'm a great believer in trying to improve my average trade from strength, improve my average all the time to a point where my trade is free. And so I kind of done that to some extent. But what I'm looking for, obviously, is I think this is the potential for a base for a rally. My concern yesterday with actually some of the extent of some of the moves, lower, it's a limiting had a limiting factor influence on the market that the rally will not necessarily be trend, but more of the same consolidation. But really, what it comes down to, I think, is I think the interesting thing is the legacy of Ben Bernanke and quantitative easing. And, as you were saying before, uh, like all ex-Fed chairman Alan Greenspan, they're seen increasingly warm light and a glow as time passes. And Ben Bernanke, I know certainly in social media he gets a lot of stick because he's establishment, but now he ceases to be establishment. People will actually probably start saying he's the man who saved the world with quantitative easing. And he did fill. I think it was a good choice of words. He did fill a gap. He filled a massive hole with quantitative easing. But the problem with quantitative easing is that it's created a flood of money that has fueled the major bull market in gold. And I think my theory is that it's a sea of dollars chasing a return, which is why we started a succession of bubbles. But let's start. Can you show the what is a market that's definitely on point, definitely that handled yesterday's price action really well is the DAX. Have you got that DAX chart in front of you?
Bring this on me a little bit. So here we have a DAX chart, and I just want to point out before you go on. So if you're viewing this and you cannot see the chart, this means that you're watching this in low resolution. So you click the little gear on the bottom of the video. Click the little gear there on the bottom. You choose 720p, and if you do that, you can see us crystal clear in all the charts. So I'm sorry.
Okay. Can you have you got a mouse, an arrow around? Well, actually, you can. People should be able to see the. Basically, the point is, I was drawing on the S&P and the Dow, and it's using things like 2000, saying we've seen similar price action before because markets have a habit of repeating themselves. Um, and good reasons why. Increasingly now with robots, algos, HFTs obviously repeating the same formulae. But the DAX has done very much the same thing as it did last FOMC. And it rallied back to 9,500 and then crashed off on prior and on FOMC last time, and then consolidated at new lows below. Can you see the arrows? Basically, it's saying I tweeted this yesterday, and saying that now, if it follows the same price action, it's that little yellow circle.
Yeah, and if people want to see this, you can just use 720p and then full screen it. You're definitely going to see that clearly. So you think it's going to rally from here?
Yeah. But it's dead. I think it's I mean, if I put it in sentiment terms, because I think sentiment's quite important. People have tried buying it, including myself, and you can make some money on some rallies, but the rallies haven't been sustained. Dead cat bounces. Now, the question now is people are going to be unsure, are nervous. Well, we've got FOMC, we've got the excuses out, and this is when the real flows. Now we've had barriers to entry. We've had reasons not to get in the market. This is when you start to see real flows, and that's where it's going to be really interesting. Are people, in my belief, is that people are going to start coming and saying the market's cheap. I've got some dollars. I've got some money. I want to invest in the market and support the market from here. I mean, I don't think it represents good value in itself from a trading perspective. I think it's close to a bottom. So will they come in and support the market, or will people say, "Look, I'm really worried about what's happening in the world. Is this the time to bail out? Should I be getting out my stocks?" And so that, I think the kind of the yellow circle there is summing up that perspective. And did FOMC do anything to support that? Did it fill or kill the idea that the market's still in a major uptrend? And I think it's to be resolved, but you can see quite clearly where I'm coming from. I'm happy for the market to be quiet here. It does feel, from a traditional perspective, like it's been in a downtrend and now it's going sideways. It's dangerous, and given that yellow circle, given what the Dow likes to do and the S&P, it could just go sideways today. But I'm looking for the rally. I'm looking for it to break back up. We've seen the DAX has got as high as open on the day quite high, 93.45, 55, with potential to go straight from a actually short term. We've got to be careful about talking too technical and too short term, but it's faded. It's gone from 93.50 down to 92.90, and New York's probably going to keep it up, and we'll sell off into New York. And again, those people who follow me will know that I love trading Dow cycles called TikTok, and I'll be looking for it to sell off on the open, fail, hold in the first 60 to 90 minutes, and that gives me my low, my stop loss, my platform, my base from which I'm looking for a larger rally. So the DAX fractal there is kind of cool, it's kind of sexy, and it sums up the market pretty well. And if you look what it did, that ramped. That ramped from, so we can wait for it to rally. If you look actually on the DAX chart, there's always, if you're of the Jesse Livermore school, you don't like trying to buy the low or sell the absolute top, but you want to see safer times and wait for the trend to establish itself. You can see that once the DAX establishes itself over 93.10, 93.50, it pulled back to that level before it went higher. So, there's a safer time to buy. So I think the impact, Ben's impact remains to be seen. The 10 billion taper. It remains to be seen in the next 24, 48 hours, but I think the people will give a sigh of relief and follow what they did in the last FOMC and see the market recover. That's the immediate impact of his last meeting. But more importantly, have you got your picture of the flamingos?
I sure do.
Well, I've used this before. I've actually used the example of headless chickens, because that's
I have it here. Just 1 second. Even this is the best GIF I have ever seen. I think GIFs are not funny anymore.
Well. It's not a video; it's a GIF. So I mean, that's a picture file. But it's cool. They're running around, looking everywhere, looking around, looking pretty stupid, but in a herd, looking for where they're going to put their money. Yeah, and that's each one of those flamingos represents each quantitative easing purchase. In my opinion, each bout of dollars thrown into the market, they're looking for the next gold, they're looking. I think Bitcoin is a reflection of quantitative easing as well. Money out there looking for a return. And my belief is that the emerging market crisis we're seeing unfolding is part of the same thing. Is that it's not, you can't blame quantitative easing on saying, oh, this is a crisis on lack of growth in Asia and problems in Turkey or South Africa, or they had transport issues in South Africa that started that process. Can't do that. But what you can do is saying, if the market shows a sign of weakness, there's a real risk that it's going to be exaggerated because of these flamingos, this quantitative easing money that can go in and take gold from. You could say that gold has now found it's back to its normal, it's back to its equilibrium point. Actually, can you show that? Have you got a bubble chart, the bubble theory?
I sure do.
It's traditional bubble analysis. One of the things I love about this chart, from a technical point of view, is I'm missing the left-hand side of it, but that is the different phases in the bubble.
Yeah.
And it's quite clear to me that gold did the same thing.
Here we go. It's the full chart.
Now the one big problem I have with this chart, it sounds like I'm trying to contrive my view to suit this chart, but you see after the new paradigm, Grantham paradigm shift, financialization of gold, and then you get the bull trap, and then it finally goes to returns to normal and then collapses. The problem I have with this chart is the capitulation and the decline in price, because often what you see is you can see the decline in price. Maybe gold is going back to 500. I don't think so. What you tend to see is you see the market die. It's almost like, in real terms, it might do that because the market goes nowhere. You've taken the air out of the bubble and it's just flat. It's no longer an interesting market. So you need to look for, from a trading perspective, it's kind of like you can trade the range and whatever, but look for another bubble. And that's what I want to talk about today, is looking for the next bubble. And can we switch to emerging markets?
Is that the 4-1?
That's one that's going to be people are going to struggle with because there's so much on there.
This one?
I wanted to show that more than the reason I wanted to show it was twofold. Is it follows, if you see gold on the bottom left, 2008 to 2010, it's following the bubble chart. Now, obviously that's 2008 to 2010. Yesterday, I think it was yesterday, it feels like, maybe it wasn't, maybe it was the day before. It's been a long week, because I was showing that it's got similarities to Turkey. Now, you could argue that Turkey is not so mature in its uptrend as they possibly suggested, and that it may just be going sideways before it goes up again. But one by one, all of these currencies are moving. If you see at the top of I've got listed there, this was done back in last September when I started developing this theory. You've got the Chinese yuan, you've got the Brazilian real, Indian rupee, South African rand, Russian ruble. If you look, you definitely won't see this on the chart. If you could zoom in, it's very to Chinese
I
yuan.
like it when you spring this on. I'm sorry, I can't zoom right now. I can't do it, but just give me a second then if you want me to.
Oh, it's okay. I mean,
no, I can.
We'll treat the.
No, I can. Just
chart.
give me a second then.
I mean, if I had the time, I will update this because
No,
I've actually got it updated in a different form.
I can zoom. Just give me 1 second.
Sure. But the point I want to make is each one of these markets is doing the same thing, but they're doing it in different stages.
Yes.
You only need to look at Turkish lira and the South African rand this week to see they've been doing slightly different things. And what it really is interesting is, perhaps it doesn't matter why. Perhaps you can localize each and every bubble that's expanding in emerging markets. Bubble's obviously an inverted bubble in this case because the currency is the bubble the wrong way. The dollar is the bubble in that sense. Maybe you can find each local reasons for each one, but that I don't think tells a full story. I think the real reason is they're speculative bubbles. People are going to get involved in these markets because they're a quick return. I mean, and why not? I didn't get involved in Bitcoin. I refused to get in Bitcoin because I don't know if it's going to be here tomorrow. But it's kind of a dodgy thing to say. I know the Turkish lira is going to be here tomorrow, but they're good markets to trade, and they're clean, they're trending, they're they're worth picking out even on an intraday basis. When they start moving, they're moving with such volatility. Provided you have the liquidity, then they're trading. They're technically very good. They're working on Fibos, a lot of them. But what is really from a big play for 2014 play point of view, then you need to look at the ones clearly that are less advanced. Can you show the chart again?
Yes,
Good.
1 second. I'm just trying to. There you go. I'm just working to appease you with
Because
the Zoom.
yeah, I mean, I tweeted yesterday that the lack of volatility in the South African rand is starting to worry me, because I'm looking for a stupid blowout, higher than it's been. Obviously, like the gold blowout 1975. I want the South African rand to do that for two reasons. One is I'm still long. I'm probably a ninth long from my, I've had this baby for a long time and said goodbye to a lot of money on the carry, all the way from 850. So it shows you how long I've had it. So I'm looking to get out, because when you start whacking rates up, it's going to get more and more painful. But what I want to do is find a time when it gets really stupid, when I actually buy the South African rand, because each of these emerging markets are cheap, but some are going to get much cheaper.
Can I be a devil's advocate, or I don't know if that's a good term at all, but can we talk a little bit about exactly that? Like there seems to be a new trend, and so I love when you talk about specific trades, and that's exactly what this show should be. But also, I just want to, it's like you touch on the South African rand, and we have like these fragile 5 or 6 or whatever the currencies. I guess that's what you have here, is the.
Well, actually, no, Ashraf Lady coined it very well. You don't have bricks anymore. You don't have pigs. You've gone from both bricks and pigs to rats.
Rats is.
That's what they are. As
Rand.
Argentina, Turkey, and South Africa.
Yeah, that's a good one. Rats.
Rats.
So, but how?
Leaving the ship.
It's a new. The reason I ask is I'm trying to take like a more macro sort of point of view. So first of all, you have the trades, and I think your recommendations are excellent and very pinpointed, and you can actually act on it. But also because you're also a thinker in a sense where you're actually able to sit down and
Rationalize.
Yeah, and with your experience, your political experience, and your life experience, you actually have the possibility of looking at this from a more sort of practical, real life point of view, because trading is sometimes very compartmentalized. And so, what do you think about especially South Africa being so? I mean, well, they're all fragile, but you have the added fragility due to this dependency on gold. What do you think about this? What do you think is going to happen to these countries? Like a little bit further.
You just described Australia as well, then, didn't you? If you want to go macro and say we have fragility and stability based on gold, then and Australia's whole ability to shrug off the credit crunch rests on gold. So take a walk around Perth and go into a few bars and ask them what they think of Australia's dependency. But anyway, that's beside the point.
No,
Maybe
that's a very good
point.
point. Do you think that's? I never heard anyone say that before. Put them in the same basket. Is it tradable?
No, I just took the link. I mean, you immediately started talking about dependency on gold. Then I would argue that Australia's been over dependent on gold, and if gold goes down in price, then you can basket. Yeah, I mean, I actually think there are lots of baskets going on, and I think different currencies belong in different basket, more than one basket. You can put Australia with the Asian basket. You can put it with the gold basket. I mean, some people would say, yes, Australian dollar is just a basket case. But anyway, that's beside the point. Your question was, do I think...
No, but it's an incredibly interesting point you make. Because it's interesting because I have not heard anyone make that point.
I've made the point that I don't think we should localize, because I think there's something really serious going on in terms of money. And it shouldn't be, it shouldn't be flamingos or headless chickens. It should be lions, tigers, because they rip things apart. Massive speculation can destroy economies. There's a great story of someone who used a guy, a really great trader. He was a customer at the time, and he got a call from a central bank saying, I'm not going to give his name, can you not do the trade you're planning? Because you're going to bankrupt us.
What?
He was told, no, he was told not to do the trade because their market, and it's not a tin pot country. This is a serious country that is in the G20. That was told. He was told not to do, asked not to do the trade. They almost begged him not to do the trade because he was at risk of bankrupting that country, and it's not a name that it's not one of the obvious names in the market, but it shows you the extent to which speculation can have an impact on the first defense, the currency, but also then in the real economy, because that's what we're talking about ultimately. So localized, I think the point I should make is that the real localization of any of this speculation, any of these bubbles, is how the consequences fall out. So if the people go after the Turkish lira, then what will be the impact on the Turkish economy, and therefore what will be the impact on the currency in return? Well, if they continue to raise rates, that's going to destroy the domestic economy, and that will put the currency even more under pressure, and that will create a massive risk premium. What that 12% will represent will be like 7-8% risk, saying, I want 8% to hold anything Turkish because it's that great a risk. You can allow the inflation being 3 for whatever percent otherwise. And what is that money doing? Why is that money going and hitting Turkey? Because they think the market's going to move. They think they don't mind. They pay 12% because I'm going to be out tomorrow or the day after. Who cares? That has negligible impact compared to a 1% move. I can make 24 hours. I don't mind that cost to carry. So I'll go after the Turkish lira. And tomorrow it's going to be, well, hang on. They haven't hit Hungary. Let's have a go at the half. And lo and behold, it's gone there. If you go back to that chart, you'll see that Russia, the ruble, hasn't gone. Look at, I can't, I could look at it on my own chart because you haven't got it back up there. But the ruble is the next one to go. It hasn't broken to new highs. Yeah. And you want a comparison, look at the yen. Compare dollar yen to these charts as well, because it did the same thing. And you can see also, actually, I made the point about the Indian rupee, similar to the Turkish lira at that point. It was similar at that point. I'm pointing to the chart. You can see me.
No, you can point. You can do like a screen point, because this is your left, right? Yeah.
Right. So big picture play, macro stuff. This is kind of fractals, technical analysis with a real fundamental justification. The macro side of it is a series of bubbles created by quantitative easing. Will be seen. It might not be seen. Who cares if it's seen or not? But it's an opportunity to make some money by going after some of these step-by-step devaluations. And the ruble hasn't been hit yet. And what is really interesting is the Hungarian is even further behind than the ruble. So today on the back of rumors looks a little bit bloated, but a little bit overdone. But next week I'm going to be looking seriously at the Hungarian as a play for the year, as a catch-up trade on some of the other devaluations, because it's trading the same way.
Do you care about rumors or anything like this around? Did you hear the Hungarian rumor yesterday? I don't know if it preceded the move or not. I bet it didn't. I just saw it on some of these Squawk services, and they said something like that Hungary could theoretically not pay their a bond payment.
Yeah, I'm a natural fader of rumors because the rumor.
I'm not saying it's right or wrong.
I'm
just saying that
then you'll lose 1 in 20 and make 19 out of 20. Yeah. So.
No, I'm not saying it's good. I don't like rumors. I'm just like saying you're bringing up.
But I actually
that's
do.
the only thing people talk about.
You misunderstand. I like rumors because they move markets in wrong places that give you an opportunity to trade. And you got to remember, some of the rumors are spread for reasons, a good reason. Someone has started something, and often some of these are I won't say officially inspired rumors, but they're rumors started for real reasons, and so to initiate a trade. So sometimes they create the opportunity not to go with the rumor, but the opposite way. It's like
that's an interesting
Euro-Swiss
point, actually.
I've traded 75% of the rumors on Euro-Swiss the other way. The number of times they're going to raise the floor is just beyond belief. And now people talking about dropping the floor, and I'm doing the same thing. You know, it drops 30, 40, 50 points on the back of a rumor. Hello. You know. But anyway,
So, but that's an interesting point. I just want to you point out something that I observed, because I've almost never seen a rumor move markets. What I've seen is the rumor coming at exactly the bottom tick or the top tick,
that's
and
because you've.
then when you see it on the squawk or whatever, like when
Oh, I
it's
see.
out.
Well, yeah, once it's but that's by the ironically, buy the rumor, sell the fact. That's buy the rumor, you know, buy the rumor when it's first started, and then sell the end of the rumor when it's announced publicly. You know,
Yeah.
and
No, but I
that's
think that's a brilliant strategy actually. That could actually really work from just judging by my like anecdotal experience. I
you
like it.
think.
I like it. Yeah.
No,
You're a
using
brilliant
you.
man,
I've
Ed.
kind of
I actually
spent
really like.
20 years.
No, but you're
This is oh gosh, this is spoofing. This is what they called spoofing,
yeah.
which used to be done on price. Market would be like 80, 90, or 85, 90, whatever. I mean, in those days spreads were wider. Let's say 81, 82. Next thing you know, it's 90 bid, 90 bid. Why is it 90 bid? Paid, figure bid. And what someone's doing is spoofing the market. Everyone's going, oh, it's broken. It's going through stops. They buy it. Buy it. Euro dollar the other day would be an example of how this could have been the case when the euro dollar broke 137. How you left 137.20, taking stops is a major break. And next thing you know, whoever's actually started it is going, yours. Everyone is sitting there long, and then suddenly it's 50 given on the big figure below. That's the same process as a rumor, but without actually moving the money. Someone is manipulating the price. Now, it's interesting that you've got the stories of price manipulation, because I'm quite skeptical of people being able to manipulate prices nowadays, but they certainly used to. And rumors are just a verbal form of price manipulation that was quite common and may still be common. It's not that I'm aware of, but anyway, we're going off point. So Hungarian for me will be, the truth behind the Hungarian in the next few months for 2014, I think has been reflected by what has happened in the last 24 hours. The fact it's a rumor, I think, it may be a rumor, may not be, is beside the point. What it should do, if it's a rumor, is fade back down into next week and provide me, at least, with an opportunity, because I just think go on record now. Let's start a bubble board. Let's put, behind you,
I'm starting
or
already.
wherever, start a board of markets that are at different phases. We showed that chart of the standard phases of a bubble, and we can put different currencies, different markets on a bubble board. And some people would argue that
idea.
gold and Bitcoin are in the returning to normal phase now.
Okay, I'm putting it in the drive. So we have to find a way
and we
to.
can put different currencies there, and we can say, we've seen a 10% devalue. We've seen the Turkish lira go on today. It's in a new phase, in
Okay,
the bubble.
I'm showing you the bubble board now.
Along one condition, that we don't place the S&P anywhere in that board, because we're going to argue. Or some people are.
I'm just saying. Okay, I can.
What we could do is have the S&P
No,
and the
I'm
Dow
creating the board right
different
now.
places in the bubble.
So this is the bubble board. I think I can. Okay, just 1 second. Yes. So now you're seeing the bubble board. What should I put on it?
Well, we need to draw the bubble. No, let's set it up for next time. Yeah, let's do it properly rather than draw it up. I could
we
go
can type
through
it
the
out.
list.
Bitcoin.
I would start. You could start start with the Nikkei back in the 1980s, because that's a really good template for what has happened. People are, saying gold is going to collapse in price, and I'm saying that some markets do collapse in price. Obviously, they collapse in price to some extent after a bubble, but once they've stopped collapsing, some go sideways. Real deflation of a market in a true sense, when it just the air goes out of it. No one trades it. I mean, and that's the Nikkei. Nikkei for a decade has been a lost market, because that's a post effect of a bubble. And then you can obviously put gold in, and Bitcoin arguably.
Gold. How can gold be a bubble still?
No, gold is in the gold has entered the
X bubble.
Well, yeah, the capitulation phase when it doesn't go down in price necessarily, but goes sideways like the Nikkei.
Unpopped bubbles.
Well, no, but let's do it another day because it's not the time or place to do it. You know, the bubble board needs a chart, and
It's
we can
already
put
beautiful. I made it beautiful.
y- you know we can put the RIC codes or whatever the codes in for the because I use Reuters, it's called a RIC. You know, like the HUF can go one place in the chart, and then we
Yeah.
put it move it
No, we put
around
this
and
on. We're building a new site. So people have been complaining that the site is maybe not so beautiful. It's functional, which is the real thing we care about, and we're so early in what we're doing. I mean,
yeah, I think
you have
that's the
no
point to
idea
make.
what this
It's the
show is going to
point.
be.
It's the point to make. I mean, within the bubble chart, we're not even on the chart yet because
That's a very good idea, though. It's a very
there's a point.
tabloid
The
idea.
point to be made about what we're doing here is we could do trial this on our own and get some ideas, but we actually want some feedback, and feedback gives you highlights some good points and shows where the problems are. Disorganization, some things could be better. Rough and rugged. Sometimes it works. There's a balance between being really smooth and getting a pretty blonde and getting rid of Sperry is what we all want.
Yeah, I know.
Doing a CNBC, whereas you'd actually want someone who's really sharp and clued in like
But I
Sperry.
am blonde, though, so you tell me I'm not pretty? Well, I'm not blonde. I'm a dirty blonde.
Well, I used to be blonde, mate, but that's beside the point. Um, but anyway, the so that I think that's a good concept. I mean, the point I'm making is, hang there with us. You'll watch something develop in real
Yeah,
time.
so I mean, next week already, a lot of the new stuff. So what we're doing here, so for the people who are watching now for the first time, I see we have some new watchers here, and some people really don't understand what we're doing, and that's okay. But what we're trying to do here is trying to make the TV we want to watch. So TV, as far as I'm concerned, is unwatchable. So we are rethinking this whole thing, and so far people like it. We have some people who are supporting us. We have a very small studio. We're rethinking how you approach so it looks a little nice, but you don't invest $20 million. And we do all these things, and we're working with the people we respect, people who are smart, like the companies we work with. So one of the first companies, like I just want to plug them now. It's a good time to plug them actually. So one of the companies that has helped us made this possible is Infront. So Infront is the terminal that I have used for quite a long time, and I'm segueing very subtly into a commercial here. And Infront is basically a terminal program. So this is how I view the markets. Oh, by the way, if you're watching this and you're watching this in not HD, just on the bottom here, there, you just click the little wheel. You change it to 720p, and you should see all the charts in beautiful HD, and you can full screen it if you really want to see it. So this is what's called the Infront Pro Plus terminal. It's my terminal of choice. I got FX here on the left. I got major indices. I got futures. There's some Nikkei futures here, which some days are incredibly important. It's like the reason I could pull up on the previous show, I pulled up the 10-year in 2 seconds, is because the 10-year, the treasury is right here. And I just pull it up. I can do a simple comparison. So I'm trying to remember the code here. Let's do Germany. What is the German code? GE? Is that it? Let's do. I'm gonna see what the code is. UBM. G. Is it Germany? G. UBM. Now I'm doing this without rehearsal. I just gotta see what the German code is so I can compare it. DEM BMK. Uh-huh. DEM BMK. So this is the German bond yield. So I'm comparing the 10-year here. So one of this is exchange traded, another one I guess is a little bit different. So you're gonna have some gaps here, but here you can do some simple comparison. I just love how easy it is to use this, and you can do all sorts of things with it that you normally would think would require $2,000 a month software. So that's not the best example, but it's just here. So on the right hand side we have an innovation here, which I think is only for this terminal. So it's a Twitter integration, which is effectively a free newswire. So you have a bunch of what called wires here. One's newswires, some are But interesting. These are a few days old. It's effectively searches, and they're all still valid. So that's why they're not been changed. And then you have commodities, economists, global macro, sell side, buy side, and you have one here if you want to waste time with silly. So and then you just click the newswire, which I keep open. So this is a nice way to catch news. It cycles through every few seconds, and at the end, if you want to discover it, you really should try this out. Go infront.com/try, I think it is, and then you can try it. So here's the whole terminal on one page. Little button here was released without a big fanfare, and it's called a go screen. So here you have every single thing you need to know. So if you need to follow every dollar cross, you just click there. If you need to have, let's say you want just Austria, I don't know if Austrian news is the best example. So it's based off of Dow Jones and my feed. So I only have, that's a terrible example. Let's just the US news. So this is US news only, which is nice for that. But here's a good one. Hot news, which some might refer to as red headlines. So here's the stuff you need to know, and it's just condensed. This is something I look at every single day. FX news. FX in general is sometimes a little bit overwhelming because it's so much. And then you have economic indicators. Everything is collected. Global IPOs I really like. I've not seen that anywhere else connected like this. So every IPO in the world. And G7 macro calendar, which I used just a few minutes ago. So anyway, that's the terminal. Because of Infront, we can actually do this thing. And because of this ad, Ed could sneak out and do something. But he's back. I just saw him sneak out of over my shoulder. I perfectly segued into a commercial, but the reason why I do these commercials is because I want everyone to sign up for the Infront service. So there you go. Goinfront.com. And Ed is back.
Yeah.
Do you feel like we're covered? We covered the stuff we wanted to talk about, but is there anything more you want to look at, or?
Did we cover everything? Let me just.
My list had 3 items on it, but I guess we could talk for 10 hours if we wanted to. So.
Well, you could talk about markets as they go on, along as you don't mind when I start.
Oh yeah, for sure.
Because I actually am more of a active trader than people where I trade a lot. Primarily because I'm always trying to improve my risk return. I always say, trade from strength. Always try and trade to minimize your risk. I trade almost the wrong way, not the wrong way around, because I think it's the right way around. We talked about it yesterday about professional traders. Some of the great traders talked about first and foremost protecting your butt, protecting your capital, minimizing your risk. And was it Rogers who said that you never risk anything when he traded, which doesn't make sense because you've got a risk to make money, but. What I'm saying is I try within my trades. I don't just buy, waiting to for a target ultimately one place to sell. I actually often layer in, trying to link that to the probabilities of where I think the market will go to enter a trade, and I also will phase out, not necessarily in one shot, in order to. Again, with the probabilities as I see them, the risk points on the upside if I'm long, but also to improve my entry point. So where my stop loss is hopefully by the time if and when it gets triggered, I've reduced my potential loss significantly. It's like today, I'm reducing my S&P and Dow long above 58 because it looks like it can have another go at the lows on the open. Maybe another attempt, and then, as I said earlier, then the first 60, 90 minutes fishing for a bottom again. Yeah, you can trade it. There's all sorts of clever theories you can come up, but it's a range shag. It's 157.20 Dow, 158.20 trades. How are you left?
Yeah.
And then for that reason, excuse me. You've got several dimensions. I'm looking for a bottom, but I can trade the range. I believe a great believer in diversifying my risk, so that's why I diversify time frames and I diversify markets. So I don't just pick one market. Let's say the Dow goes sideways for like 6 months. It's going to limit my opportunity to make money if I don't believe it's going to go sideways for 6 months. So I can trade other markets as well. I can focus on the emerging markets because that's where the volatility is. I could even get myself a pink jacket and be a flamingo and just chase the bubbles because there's enough money in that alone. Has been for the last couple of years, and is likely to be for 2014. Forget the year of the horse. Maybe this is the year of the bubble.
That's a brilliant quote.
Well, no, because people think I'm calling a top in the down. You got to be careful. There's several phrases and cliches out there, but you got to be careful. Sometimes people don't get the wrong end of the stick. I'm aware, Sverre, that I haven't got a very straightforward, obvious buy it here, sell it there approach because.
Well, you're quite obvious. In a good
Well,
way.
I try to be obvious. I'm glad you said that because some of the things I say and do. I run a service, MarketVisionTV.com, about currencies, and has a few members and has an overhead. So I don't want to go out and give everything away because I want people to come in and understand and learn some of the approaches.
What's the website again? I've been there several times, but.
MarketVisionTV.com. For example, it's like I was talking today before we spoke. I produced a video on Dollar Canada. I mean, Dollar Canada's been amazing. Dollar Canada is another bubble. It should have been on. No, it's not another bubble. It's another. It's in the bubble process. It's still in a middle of the. There you go. You see, there's an example right in front of you. That's an old video from Monday, a golden wedge.
Let's watch it.
Basically about the Aussie, the illusion. This is an old video from last week.
I want to see it.
Analyzed
So
in
people
3
can
time
see it.
frames, all geared to what traders
I think we
want.
can hear it.
Concise, high quality, Elliott wave oriented, technical analysis for less than the cost of a bid offer.
Just so you know, I can't hear it. I can't hear it, but I think the viewers can. So I'm just going to continue.
Are we any good? That's for you to decide. But we're followed by the best
I'm
of the
glad you said
release.
that because
So
something
please,
like
register
I
for
know
a trial
sometimes
after the video.
maybe
$1?
I basically
It
about
cost
the
$1?
Aussie, the illusion. This is an
That's
old
a good
video for a
price.
trial.
Yeah, that's good.
Yeah, no, it's people have remarked how
That's a good entry. So basically, yeah, it's a free trial, but yeah, I get it. That's a nice one. So I can't really see one that's more. So I'm just going to continue. Which, if I'm going to showcase something more like
I'm
longer.
glad you said that because something
Can I?
like I know sometimes
Wow, I actually haven't delved that deep into this.
maybe no, you'll go back to the I don't mind. It doesn't matter if you choose one that's right or wrong. You can see why it's right. Go to go to the Aussie.
Yeah, it's a free trial. The first one? That's the one I
Yeah,
tried.
well, that's an old one, but it's from. Yeah, just play it. Yeah, see what it says. Let's see if I'm right or wrong.
Yeah, but we can't hear it. That's the problem. It goes out the audio, but doesn't go through the system, so we can't actually hear it.
Well, you can see it's going to make a projection. So just play it and then scroll it.
Just a
if you
quick
can.
word
Yeah, you
before
can
your
scroll
video
it.
starts. Welcome to Market
That's
Vision.
the
10
ads.
currency pairs analyzed in 3 time frames, all
Skip
geared
it.
to
Oh,
what
there we go.
To
Ah,
go
yeah.
to
Hello
the
and welcome
that
to the short-term
handsome
update
fella?
on the Australian dollar.
I don't know. You see, it's looking younger, isn't it?
As it's
Almost
recovered
suspicious,
after the
yeah.
spike of the daily channel support and a
I
clear
like the soft
momentum
one.
rise
Beautiful.
within what appears to be a
I mean,
difficult
technical analysis
wedge.
is often such an ugly
Now,
thing,
since
so we
wedges
can-
should comprise 5
Now the green arrow, you see, there's buy. All below 87.
Was it correct?
will not sustain the current recovery, but in fact repeat the same
well, a
small
tad
correction
higher
as before, and basically that by fading. You see
pretty on
it
point, as they keep saying.
87.70 and spiking
It's a
down the
wedge.
final target to 86.30.
No, I think it's very clear.
Or possibly 86.10 if it maintains the same relationship within.
So you're thinking about
Since
2009
this
highs?
also matches the gold price action at the low.
What do you mean? This is a short-term chart. The last, this is the week.
Yeah,
Buy
but
this dips
oh,
for a later recovery.
January
trade.
9th. I thought it was
Current
January
resistance
9th.
at 88 in the figure to 88.95, the previous corrective high,
Yeah, no,
and
this
then
is,
to
that's bad.
90, the previous
Basically, it's wedging its
corrective
way
high,
down.
and the current
If you and you see the
14.2
circles,
since
they're
the
fractals. All these
final
corrections in the Aussie of late have been the same.
Yeah.
So there's a risk the Aussie's going to be has done the same thing. It's got that spiked high again, the same spike above 88. I was expecting that wedge, well above that wedge line. This is a short-term 88.20. I was expecting the same as 1990 correction. It spiked up and immediately my stream went alive with bull market and everything. and it's proved correct. It's a nice trade, and now it's broken down and it keeps doing the same thing on a smaller and smaller scale. So it's kind of cool. But that's the type of thing I do and look at, and but we're talking about sometimes being too clever and not being as accessible. I refer to it as a golden wedge because there's analogies with gold. I've talked before about the macro point about Aussie and gold, a golden wedge. That's the idea is to make it not mysterious, but make it like interesting and allude to something without giving it all away. So that's really.
Yeah, by the way, I'm sorry. I think we broadcast audio incredibly loud, but we couldn't hear anything. So we just basically blew off the eardrums of half the people watching. So I'm just getting feedback right now.
But mate, you
I'm
don't
sorry.
need ears to trade. You need eyes and fingers.
Exactly. So it was like it was a public service. We need to hone the remaining. It's like when you go blind, you hear really well, or vice versa. That's what we did. So it was all intentional.
Here's a clip. Don't listen to anyone else. Just take pictures. So you can't listen to anyone else. No,
So we
you're
just did
dead.
1 hour, no, 45 minutes. Don't listen to any of it. Do whatever you want. Live your own life. Something like that.
You need to take responsibility, certainly.
By the way, I had an anecdote I wanted to bring up. That I discovered yesterday. It's a story. It's related but unrelated. I want to tell the story before we. Do you have to go right now?
No, don't listen to anyone.
So we're going to be on in about 15 minutes with Michelle for structured research, and that's going to be really good. So we're taking these like banking research, all these like pro kind of products, and we're talking about them to the masses. Really. So it's going to be really good. I think.
She's a clever girl, Michelle, and I tell you, she's well connected.
Yeah, no, she knows a lot. She's one of the smartest people I know, and it's going to be really good. You have to go right.
Well, it's a reflection. Often, you can tell sometimes by the type of people they are, by who they know. Because she knows some smart people. Well, she knows us, yeah.
Yeah, well, there's exceptions. So there's a story. You might have heard it. It's repeated in many books. It's something like in 1923 in Chicago Edgewater Beach Hotel, a bunch of the 8 like richest guys in America came together to have a meeting, have drinks, eat. We're so brilliant, we're so smart, all this. And the story goes, I think it was 10 years later, they were all broke. One was in a mental institution, 2 people committed suicide, 3 or 4 the rest one died of natural causes, and it was all like these tragic stories. And the idea behind this was, don't be happy with the current state of affairs. So let's say you're a trader, for instance. The idea would be, don't just because your system works now, don't be complacent. And that's kind of what we're talking about. That's why quotes are so interesting, because you always have to like adapt to new measurables. But I researched this story yesterday, and I figured out that the story is not actually completely true. So it was first circulated in 1948, like 20 years later. But what's interesting is like the content of it is pretty correct. So the first one was Charles Schwab, not the Schwab of today, but. And he lost.
Founder, isn't it? When was that?
No, it's Bethlehem Steel. That was his thing. And it was interesting. So basically, he lost a lot of money, like most people in the stock crash of 29. And
didn't he lose a bundle because Jesse Livermore sold his stock before then, wasn't
Jesse
it?
Livermore is later on this list. Jesse Livermore is later on this list, by the way. Yeah, I mean, Jesse Livermore did make okay. More than
sorry, I'm ruining your story, Karen.
No, I'm sorry. And basically he spent all of the money because he kept up the lifestyle, but he didn't have the income. Then you have Howard Hobson. He was the New York regulator, ended up running a conglomerate called AgeCo. And he was incredibly wealthy, and in 1941 he was sentenced to 5 years in prison for 70 pounds of mail fraud. So, and he died penniless. Richard Whitney, I'm sorry, was the head of the NYSE. You probably know this from the Livermore days, right? The story about him.
Yeah.
When he walked from pit to pit. This was made him famous during Black Thursday. He walked from pit to pit, placing huge buy orders when people were. He became like almost like a hero after this because he was perceived as the guy who was trying to save the markets. I'm not sure. I think it's kind of a foolish thing to place huge sell orders in a panic, but it was perceived at the time as being this brilliant thing. So, but the thing is about him was he probably was rather foolish because he was a very poor financial manager, and he spent $5,000.
Can I interrupt? Let me tell you a story. It's a very quick one. I'm not going to mention dates, times, or people.
Yeah.
But as a hedge fund manager, a fund manager, a significant one, yeah, had a big portfolio, and the proverbial hit. The market was crashing, and so he worked out the size of his portfolio. He was seriously worried, and so he hedged his entire portfolio in a series of very, very quick trades. Sold massively into the market, obviously fueled part of the crash. And then he told me this, I think the day after he did it. And then he realised that he got his sums wrong, and that his valuation, he completely overvalued his entire portfolio, and ended up, partly because the portfolio had gone down significantly, but he ended up selling like double the size of his portfolio in a market where the spreads were massive. If you could get filled. And so he ended up, not only did he not lose money on a day when every other fund manager lost their shirt, but he actually ended up making money out of the crash purely because he copped a crash. And it shows you sometimes you can get lucky by taking excessive risk. You are being lucky. Anyway, carry on. Get back to your story.
Oh shit! We have a double audio. I'm so sorry. We lost half viewers, I think, because we kept record. Oh, I'm so sorry for people who are annoyed all to hell. We had double audio here. I'm so sorry. So we had a lag, a 20-second lag of audio returning.
Okay, that's not good. Has that been the whole show? Or?
No, last 5 minutes. It's in 5 minutes. So no, but yeah, it's what can we do? It's teething pains. There's a lot of stuff to watch, and can you repeat what you just said? So
basically, I'll cut it really short this time. There was a fund manager during one of the crashes who worked out the size of his portfolio. Obviously, he took the valuations he had at like the beginning of the week or something, but the net result was he massively overvalued his portfolio that he was looking after. I think he even included someone else's portfolio, but ended up selling almost like double the amount he should have done in a market that was collapsing. And rather than just save some of the money that he should have lost, he actually ended up making money through the process by carrying excessive risk without knowing what he was doing, in a very lucky hit. Because obviously, sometimes you're lucky with things like that. But anyway, that's the point
it's a
I was
good one.
making.
No, but I just wanted to finish, so I might have been a little hard to listen to with the story. But the point of this story is, and then you have Jesse Livermore, who was arguably the greatest trader who ever have lived, and but he died in a very tragic way with suicide, and I think he was fairly penniless at the time. He had like $4 million, compared to what he used to have. I mean, he made and lost.
He had $5 million. He had it in his estate. He protected it because he knew he was going to blow out. He lost quite a few fortunes. He blew out a lot of money.
Do you think he was bipolar or something like that? I mean, I'm not being flippant. I'm being genuine, because bipolar. Or do you think he had mental problems? Because he was
manic depressive for sure.
Yeah, that's
I mean, as to whether I don't
guess.
think they would have ever even thought of bipolar in those days.
No, but that's the new name for manic depressive. So, but yeah, it's the same thing.
Well, okay. But anyway, yes, he was allegedly a manic depressive, and he wasn't broke. One of the reasons why he wasn't broke is he recognized that he, as a trader, that sometimes things go bad. and that you can blow your account. I think sometimes he was a bit reckless. He certainly was in the early days, but he knew that he needed to protect some of his capital for his family.
Yeah.
And so when he died, he said, I mean, this is why people think he died broke, and because he said, "I'm a failure." He wrote it on a notebook, saying effectively that he was a failure, and that's why he killed himself. But I think he meant, in general terms, from a life point of view, that he saw himself as a failure, which probably a lot of manic depressives do, or people who are both bipolar. But so he blew his head off shot himself in a hotel room. Very, very sad story, but doesn't take away from the fact that. But even let's say he wasn't even a great trader.
I'm not trying to say, by the way, bipolar is a bad thing or a good thing. I think that's part of who he was.
Yeah, I don't think anyone would have taken that. Well, you said that, sorry. No, that's what he was, and they're better equipped these days to deal with that. I think.
But I think it was also part of his character. It's like Churchill. I don't know if you probably know this story better, but famously Churchill was a very depressed person.
Black dog.
What?
He called it the black dog.
Yeah, and that's like supposedly his depression caused him to see the worst in everything. So when what's his name, the prime minister, the one who went to negotiate with Hitler,
Winston Churchill.
No, before that.
Chamberlain.
Yeah, Chamberlain. When he went in, Churchill was sort of saying that this is war, and he was always very a war person, and it's just interesting to know that his dark mind and his like ultra negative way of viewing the world was probably the very best thing for a warring economy, with all the attempted of like all the flipping and the double agents, triple agents. It kind of suits the mind of a depressed person. And the second the war was, or even before the war was really over, he was kind of not that useful anymore. So it's interesting that I would say that probably the bipolar, or whatever you want to call it, for Jesse Livermore probably helped him some ways and hurt him. You know what I mean? It's like part of who he was. I'm really not trying to.
Yeah.
I'm treading carefully here because I'm not trying to be.
Yeah, I would, because you're rewriting British history slightly. But there you go.
I mean, is this a wrong assessment? I read this in.
I've never thought of Churchill. Yeah, he was known to. He had clinical depression, and he referred to it as black dog. And these waves of depression that came on, that you could argue that spurred him on. I never really thought of it that way. I knew the guy was a depressive, but I didn't think necessarily that's why he was such a great war leader. I think he was dogged and be careful about using the same word, but he was determined in what he did. He had a vision of what he wanted to achieve and how he would achieve it. And I think, bring that back to what we're talking about, trading. It's the same thing. You need to have an idea of what you're trying to achieve, some goals, work out backwards how you can achieve them in terms of return. Trading is a slow, long process. Anyone who comes in thinking to get rich quick are going to get poor even quicker. So you're going to work out exactly how you're going to do it, how you're going to manage your risk, how manage your trading through the good times and the bad times. And if you need to set yourself targets, then if you're that type of trader, then fine. Personally, I trade a market. So when people say I've squared for the year, it never really makes sense to me, because I don't square for the year. I trade a market. So 6 months, if I square for the end of the year in, say, September, because I've done all right, then the first 6 months of the next year, I might be a dog of a market. I'm switching the word dog now. It might be a bad market for trading, and I might not make money. I'd rather have traded what was a great market the last 3 months of the year. So I trade volatility and clarity. But the point I'm making is don't do things haphazardly in markets. Have a clear idea of what you're doing, of managing your risk, of what you're trying to achieve, and then realize that it's going to take time. A lot of people say that you lose money in the first year, or if you break even, you're doing well. I don't know about that. I think it's a question of learning how, learning to find the right opportunities and trade them. And sometimes you get lucky, and sometimes you pick a good trend and it turns out to be the trend. Let's say you got long of gold, or you listen to one of our wonderful chats and you picked a good idea, which is let me do this then, because there's a market. Someone tweeted me something. Let's get this back full circle to what we were talking about. Bernanke's legacy, the succession of bubbles. I think quantitative easing has started. And just as he disappears, doesn't mean the bubbles have stopped. Doesn't mean the stock market is going to collapse, but does mean it will probably at some point. But you're seeing in emerging markets, you're seeing a series of markets that follow the same bubble pattern. And they're at different stages, which is great because we can focus almost going from one day to another. And if, within that, you can always find some strategies. Let's say that the market, look at the Turkish lira, how it reacted when they raised rates. Well, how did the South African rand react when they raised rates? Did they do something similar? Well, when the Hungary raises rates, because, they're defaulting or what, doesn't matter whether they are or not, and you got an idea of what it might do. And this is the same approach to fractals, is what happened before when something similar happened. I use price action, but this is the same thing in terms of fundamentals or political events. What did it happen last time? Well, two things to say. Last time there was an FOMC, the DAX did exactly this. It consolidated the day after, and net result it went higher, which is why I'm long DAX. And have you got a chart there of the someone sent me a tweet this morning of the Singapore dollar. Have you got that?
This one?
Yeah. Talked about gold starting the process. Talked about, the link of Turkish lira and the South African rand. And how the Hungarian, the ruble is way behind. Looks like it's going to go this year at some point, start going. And the Hungarian seems it's behind. This is a chart that's just starting a bubble. And it hasn't started. And can you see on the left-hand side? The left-hand side of this chart is you've got two, funnily enough, they're two bubbles, they're two circles. It's the same price action. Did you see what it did back in 97, 95, 97?
Yeah, it just touched the line and back up. What do you mean? The
bubble. You see the circle, the same type of price action within the circle, and then what it did after the circle once it broke that to the upside. It's the same thing, same price action before you saw the rally. Through 97 to 2001, it started with a very, very similar price action to the price action we're seeing now.
This is quite a long trade. What do you think the time frame of it is?
Oh, yeah. It's not. Well, once it broke through the highs, that wasn't such a long trade. That was, how many is it? 140 is 40. That was about 25% in a year return. Once it broke the equivalent of it's 130, whatever you want to say, 132.
What was
around
this, the
there.
Asian crisis that triggered this, or what was it?
Yeah. 97, 98.
Yeah, it's a decent idea. The setup is not identical, but I can see this.
No, the fundamentals. What this guy is saying. He's Johnny Bravo. Keep it real, dude. His name's Honey. He's very
real,
very
dude. This is Twitter handle.
Sorry?
No, I just laughed at his Twitter handle.
Yeah, no, he's a good
quite
guy.
real
He's sharp
to
guy.
have
But
that.
what he's doing, what he's saying is he's highlighting the similarities before. Now, the point I made and have made, this is quite similar to the DAX, actually. In fact, ironically, this is how I find fractals. This is very, very similar to the DAX, in fact. Yeah, consolidating. That's exactly what the DAX did in Singapore 96, 97, and the same thing now. When it breaks through the 132, 134 area, like it did in 97, the same similar levels, it went through the roof. It got a 25% return in 1 year. Thank you very much. So let's say it starts shifting 5%, then you've got a flag, haven't you? You know that there's something happening here, and you know the last time it did that, it did this, and it didn't get back below 132. So you don't need to trade it. It's something that's going to be, it starts on the left-hand side of our bubble board, and it's brewing.
Oh, I love the bubble board.
and it goes from there. But it's a
I can't wait to do the graphics on the board.
I've followed a lot of Singapore's sterling Singapore and stuff in relation to the yen, and I know that it's lagged, but
You know what I like about this trade? I've never heard anyone mention the Singapore dollar ever. That's a
Really?
yeah. It's like nobody talks about that. That's what's so
Singapore
good
dollar?
about it.
well,
It's not a commonly quoted currency, which is great. Which is exactly what you want. You want something that's not.
you're Norwegian, are you? So what do you expect? I mean,
Yeah.
I just slagged off a whole country there. I apologize. What do I have to do to get
Okay.
forgiveness?
Do you want me to play? Okay.
Greek's
I
piano
no,
concerto.
no,
Hey,
I
I
have
can
to
play
it.
that.
I have to play it.
Okay.
Okay, this is, I don't know if you remember this, you might have heard this before. We're gonna bring Michelle on any minute now, so I'm just gonna, okay. If I say Maggie Thatcher, can you hear me? Okay, I might, I have to make sure that I don't do the same mistake as before. So that I loop the audio back in. I'm so sorry, we lost a lot of people there. See, there's one audio playing. Jesus Christ. This is, I have 50 tabs open at the same time, so one is playing audio from our own stream, just to check it. So this is a recording of, are you there? Yeah.
Yeah, I'm here.
This is a recording of, you're sitting so still, it's like almost weird. Okay,
No,
this
it's just the waxwork of
so
myself.
this is a recording after Norway beat England 2-1.
Was that in black and white?
No, it was just in color. Okay, 1 second. I'm gonna bring up the video here, and yeah, it's not looping anything back. So this is one of the proudest moments for Norwegian history when Norway beat. And so this is the commentator called Bjørge Lillelien, and this is my retort back to you. So let's see. Hopefully it.
I verden. Vi er best i verden. Vi har slått England. England. Kjempespødende.
Do you know
It's
this
black
play?
and white, isn't it?
No. So I have to so the problem is that Ed has to hear it as well. So it's Maggie Thatcher, can you hear me? Maggie Thatcher, can you hear me? Your boys took a hell of a beating. You know that quote? I'm playing it for our audience, but you can't hear it.
Lord Beaverbrook. Sir Winston Churchill. Sir Anthony Eden.
Bad.
Clement
Your boys took a hell of a... You don't remember that game? Well, Norway does.
Well, of course you do. Look, don't get me wrong. I love Norway. I think it's a beautiful country, actually. Particularly Oslo. I love Oslo, except I've mentioned this to you before. Vigeland's Park. What the heck was that?
Okay, listen to this. Lord Nelson, Lord Nelson, he did this off the top of his head. Lord Nelson, Lord Beaverbrook, Sir Winston Churchill, Sir Anthony Eden, Clement Attlee, Harry Cooper, Lady Diana. We beat them all. We've beaten them all. Maggie Thatcher, can you hear me? Maggie Thatcher, your boys took a hell of a beating. Your boys took a hell of a beat. That's a good quote, though. He did that off the top.
Oh yeah, no, it sounds like good lyrics to a song.
Yeah. That's possibly the most famous 30 seconds in Norwegian history, almost. Very
Yeah,
close.
I guess the English equivalent would be no disrespect, but as against the Germans, you think it's all over. It is now. You know, have you heard that one? When we beat, you got to go back to 1966 when we won the World Cup.
Yeah.
And that was the last thing that was said. Well, actually, I think it was kind of the last thing that was said at the FA when we beat Germany in the final.
Oh, here's
We've
something
lost to
happened.
Germany ever since.
Bank of America has to pay 2.1 billion in fraud case, latest one, and the e-minis are spiking a bit.
Yeah, on the open.
Yeah, it was fairly good. What's it called? The jobless claims.
Yeah.
They were alright.
No, this is on. Yeah, I'm gonna.
Yeah, I guess you should focus on trading now, and we're about.
Well, no, I'm gonna. Am I gonna cut some of the DAX? I'll give it a minute. It's 93.25. You see, if we can hold above 93.25, then it can pop. But at the moment, it looks like it's still fade 93.60.
So the
because
reaction
the,
to US GDP, strong headline, but inventory and foreign trade boosts aren't sustainable. I'm just reading up from the stream here. I'm sorry. Yeah.
I mean, it's the figures coming out of the States. What was quite interesting about FOMC was the lack of any real anything for the doves. You know, it's kind of quite hawkish, bullish for the U.S. economy. Things are going pretty cool, implying obviously taper. Another 10 billion, but
GDP 3.2. As expected, yeah.
No, it's looking good. I think I've made the point for I feel like years. I think it probably is years about US would lead the world out of recession. And
But
I think they are.
so I didn't want to interrupt or step on your point on Bernanke, but I'm willing to say that he did the right thing. I mean,
You are. Well, I am.
I have no problem with.
There's no choice. Yeah.
So he basically at this point appeared to have dodged the big bullet, which is a deep and dark depression. The U.S. had a brief depression, a brief recession, and yes, things are very bad in the U.S. for some people. That goes without a doubt, and yes, the inequalities are worse than they probably ever have been. But that's policy questions. That's political questions. That's low tax rates. This horrible minimum wage thing that's way below livable standard, and all these things, and of course the healthcare, which makes it really, really hard for people to dig themselves out of poverty when you're too sick and you can't afford healthcare. So this, like for me and Ed, this sounds preposterous when you have to bankrupt yourself for healthcare. So I think that to blame Bernanke for people being poor is completely wrong. What he did was he acted on the information he had, and he had one choice. He had to push the gas, and he did the bravest thing anyone can do, which is experiment with the world. And I think it worked out.
No, look. There was no choice. Yeah, what he did was necessary, and thank God he did it, because there was a massive black hole. As to what you say, experiment, I guess the form of doing it is just traditional printing press stuff, isn't it? It's like the monetarist answer to the Keynesian spend. He needed to do it. Needed to do it first and foremost to put liquidity back into the banking sector and fill some of those black holes. And that's arguably why it took a long time for it to come out into real economic growth. But, that's not my point. What Ben Bernanke did was necessary, and it was the right thing to do. It's never a question as a trader for supporting or not supporting, but I was a supporter of what he was doing. Quantitative easing has been the right thing. The problem is the consequences. And that's why it is so dangerous now. Because it's a political answer. We talked about this before. They're about they need to taper. They don't want to rock the boat. But quite frankly, the problem's already caused by quantitative easing in the form of gold and some of the bubbles there, and spilling over into the emerging markets, in my opinion, are a direct result of quantitative easing, the flood of money out there that's chasing a return, and they're not tapering quick enough.
Yeah.
The U.S. economy looks like it's quite robust, and yet we're still doing what is it, 65 billion a month? Why? Why? Because it's a political animal. You can't, let's say stop taper, let's stop it all. Quantitative easing, let's stop it completely. You might, particularly see if some of these banks are going through one or two processes in terms of billion-dollar fines and questions like that. Maybe they need propping up, maybe they don't. Personally, I don't think that's right. I mean, if I'm a supporter of anyone, it's Summers. I think because Summers is recognizing that what quantitative easing is doing is creating gaps. It's creating gaps and creating asset bubbles. So if you like, what I'm doing is I'm reinterpreting Summers and applying it to markets by saying that QE is creating the emerging market bubble. And that actual fact, what the Fed needs to do is start more of a quasi-Keynesian approach and identifying where there are holes, filling the holes, and trying their hardest to stop the bubbles. And to stop the bubble, they need to cut QE a lot more rapidly. Otherwise, we're going to be facing not just asset bubbles, we're going to be facing inflation talking 2-3 years down the line, and that's going to be the opposite end of the spectrum. So
isn't that too late though? I mean,
yeah, that's what I'm saying. They're playing a political game, and they're unfortunately, by playing politics, they're losing sight of the fundamentals. There's nothing. It's not rocket science. Oh, it is rocket science. It's really difficult, really easy to spout and talk about these things, but I think it's got I think what we're seeing is we will see the fallout in the markets in terms of the bubbles, how that affects the real world. And I think, Summer's point about we might need to look at spend some money in some places that is needed. Maybe the inequality. We talked a while back about PIMCO Gross's comment about the inequality. Maybe some issues like that. Maybe healthcare, maybe not. I don't know. But don't keep pumping dollars into the system because they're forming bubbles. And when bubbles pop, it's good for a trader, but it's not very good for real economies and real people. Here ends the party political broadcast on behalf of the Me Party.
What is the shipping forecast? This is something.
Shipping forecast, isn't that a book? Wasn't
No.
it a book about Canada, wasn't it?
No, it's something on British television.
No, it's British radio.
British radio, yeah.
I don't know if it still is, but it used to be the goes to all the places around Britain and tells them people what the weather's going to be doing. Gale 8 with the Beaufort scale. I'm sure shipping forecast is a book I read about. Is it Alaska, Newfoundland? Isn't it?
Why is it called shipping? That's the.
What? That's what?
Oh, well, we're stalling now. So
Why
we're gonna
don't you
turn off
guys-
the
I could-
broadcast now. We're over an hour again. Jesus Christ, me and Ed were gabbing so much. I mean, it's the worst possible combination of people if you want to keep it brief. So I'm sorry about this, but we like to we do the stuff we want to do, and if you want to listen or watch, you're free
Again,
to
it's
do that.
feedback, yeah, ideas. I mean, I've there's a couple other tweets I could have and emails I could have tweeted out, but I wanted to stay on point rather than ramble about Churchill's clinical depression and how that rewrote British history. Then if you've got some ideas you want to share, then I always look. Whenever people send me ideas, I look at them. I can't always comment on all of them. Sometimes I don't want to comment on them because it's too complicated. If I'm doing it on Twitter, it's 140 characters.
Yeah, Twitter's.
You see, and that's why one reason I do what I do, this type of thing, is I haven't traded out of this yet, and the DAX is breaking higher. So maybe it's going to be a gap up in the States on the open.
Yeah, it looks like it. Yeah, the futures look.
Well,
I don't know. We had, but it's still, I'm neutral on this in this debate here. It looks too hairy, but I think we should end the broadcast
neutral.
of the day. Yeah, but people can't see that. First of all, 720p. Change the resolution to 720p if you're watching. It's on the little gear on the bottom here. I have to tell you, and then you can see the ugliest hat you've ever seen. I think it's a bull. Is it? Is that a moose? A bull?
It's a bull.
Yeah. So I think we're gonna end it
Big.
there.
Look, I have a. You can tell. Look. You like this one. You won't be able to see it anywhere. Well,
Is that the 10,000 Dao? Is that a bear?
that's a bear.
Yeah, you're
You see,
worse.
you can see it's much more worn than.
Yeah, it's like
than the other.
sweat marks on it. No,
it's
you're
faded in the
worse
sun. Yeah,
than
I play a lot of tennis.
you're worse than Jim Cramer. I mean, this is so gimmicky. It's incredible. Did you not like that?
Hmm?
You're a regular Jim Cramer. It's so gimmicky.
Thank you.
Yeah, thank you so much.
There's as my waistline will prove, I'm nothing but substance.
And I think we end it on that. Thanks so much, Ed. I'm going to do a nice little fade here after Ed. And we're going to be doing it tomorrow. We're trying to hone what we're doing. And eventually
Yeah.
it's going to be good. But we're going to launch new things next week and the week after that. So say goodnight, Ed.
Yeah, cheers. Sorry, I'm going to stay long for now and see
Yeah.
what happens on
You
the
can
open and see
You can
if
stay
it's
on
got
the stream if
traction.
you want to. We're going to probably chatting off. And while we...
Are we?
Yes. And while we get Michelle on to do structured research, which is next, is going to be pretty good, I think. So it's worth watching for what's going to happen next.